Hello everybody, welcome back. In today's video, we're going to focus on S&P 500, where the market is and where it's going, some trade opportunities for the next week. There's a lot of big news that's coming out next week. CPI, PPI, which is going to direct this market either on the bull side or on the bear side. So we'll look at that. Also, we'll discuss the yields because I don't like where they're going. So we'll have to pay attention to what they're telling us. And so if you guys enjoyed today's video, you know what to do. See you soon. So let's start with the news first. On Wednesday, July 13th, we have core CPI data coming out at 8:30 a.m. And on Thursday, we have core PPI data coming out. So both of these data are very important to the market, and that's the reason market is sitting at a key level, key resistance basically, to decide whether they have to go up or down. So CPI, for those who don't know, CPI stands for Consumer Price Index and PPI stands for Producer Price Index. So CPI basically shows it's a measure of inflation. Okay, how much has the consumer been paying for the goods and services? So we definitely want to see some signs of cooling down or flattening or something, but we don't want the inflation to basically go up, right? That's going to be really bearish for the market. Okay. So this is really important data that we need to really pay attention at. Okay. The other thing I want to talk about is the investor sentiment. And so as of 6th of July 2022, 52.8% of the people are bearish, meaning they're fearful about the market. And only 19.4% people are bullish. I mean, look at it. It's same bullishness as on 15th of June. And I remember making a video back then, and I knew that if a lot of these people are bearish, 58.3%, that's a big number, okay? I always remember what Warren Buffett said. When everybody's fearful, maybe it's time to get greedy, okay? And so I took some trades at that time and definitely feeling more bullish when everybody's feeling more bearish, okay? So just keep an eye on that as well, okay? All right, let's jump on to the S&P 500 right now. So let's start with the bigger picture now first before we get into like lower time frames. So the trend is still bearish. Why do I say that? Nothing has changed yet. I mean, we were down, we rallied a little bit, we came down heavy, we went up, we came down, we went up, we came down. So now what we're seeing is a little bit of bullishness. Okay, why? Because we're making lower highs. Okay, we haven't broken this level down. Okay, so we are not making lower lows. We're making lower highs. Okay, and that's why there's some signs of change in trend, but we can't say the trend has changed until we break this key trend line. This trend line has to be broken first. And then we can say, okay, pull back, and then we will. That's when we can say that trend has changed and we should start getting more bullish. But until now, till now, we're still bearish, I think, because technically you would come to this level and short the market. Okay. What do we have going on? We have 50 EMA on daily, right? Would be a good shorting time, right? Because look at it here, shorting 20 short, 50 short. Okay. We went over 50, but again, shorting right here. So we know daily 50 is a good shorting area. Okay. But at this stage, we're waiting for the CPI, right? And if the CPI shows, oh, inflation is going down, okay, then the market's gonna easily break through that 50 and we're gonna head into this zone 4200. And that's once we break above 4200, yes, I think we have broken the downtrend and we're definitely just going up. Okay. So we really need to break this 4200 ultimately to get into a bull market and reach 4800 again. Okay. All time high. The other interesting thing that is left on the S&P 500 is the gap. Okay, there's a huge gap right here which hasn't been filled yet. Okay, gaps definitely get filled, but it could take sometimes more time, sometimes less. So don't guess that market has to go up and fill the gap. It may even go down and fill it later, like because there are more gaps. Like look at this gap, it hasn't been filled yet, so it has to be filled. It's just we don't know when, so don't expect it to just happen right away. Okay, it may take some time. So let's switch over to 2 hour time frame and see what trade opportunities may appear for the next week. Okay. All right. So we have a big resistance area at 3900, the previous resistance, and the market is actually heading up in that area. Okay. So what I'm waiting for is basically some kind of trend change when it reaches this area. So let's say we go up, okay, and people are basically going to short this area, right? Because it's a trend line plus it's a resistance, okay? So it's a point of confluence, a high probability trade, okay? So a lot of people are going to trade and basically in the short direction, okay? So in a normal market, in a technical market, just basically I would short this market. Once I see something like this, the market goes up, right? The price comes down, tries to rally up again, and gets rejected. And then we see something like a double bottom like we saw right here. Okay. Once we break the trend line, that's when you take short position. Okay. And then where would you be take profit level? Okay. Either this area or basically 3700. Okay. Both are possible. So if you are bear in the market currently, you're waiting for this setup. Okay. But if you're bull in the market, what you're waiting for is basically a breach above this key area. So what we want to see is if I'm a bull, okay, I want the market to go up, get rejected, right? And then go up and break that trend line and the resistance, and then come back down, retest this area, okay? And I see some buying signs here, and then I start to basically break out. And that's when I'm gonna be like, okay, I'm a bull now, and where my take profit zone is gonna be, I'm gonna be taking profit at this area, 4200, as I just showed you on a daily time frame. So when it comes back, um, basically I'm looking at when it goes up, I'm trying to take profit in this area. Okay, really a big area where a lot of people are going to take profit. Okay, so that's how you have to basically play out. If you're just predicting the market, it's not going to be good in the long run. Okay, so you have to look at the price action and then say, okay, is it telling me upside or it's telling me to go down? Okay, so wait for the price action around this area. I'm 100% sure we're going to see some opportunities. We may be hovering in that zone because of the Wednesday news or the core data that we are waiting for. But Monday, Tuesday is going to be very interesting. We may, I don't know. I see, it would be stupid if I just tell you, oh yeah, we're going up, okay? Because I can't tell you we're just going up. Market's gonna tell us either it's going up or it's going down, okay? So all I'm telling you is wait for the price action at this area and see if you're breaking out and then we're going up, or we are just getting rejected of this area and then we're going down. And if you're going down 3800 or 3700, and if we break below 3700, my God, we're going to 3500 for sure. I don't think this area is going to hold up. If you're a bear, you're waiting for 37 and break below 37, and we're going to 3500. If you're a bull, we're basically very close to breaking above, so it's basically do or die. It's today or it's like maybe a month or so, then we may have to get bullish again once we reach 3500, because that's a really big level. A lot of people are going to come in. I'm pretty sure 35 is like everybody's going to come in to buy at that level. It's a key 50% fib level, so we're going to pay attention if we ever get to that area. But most likely we are in a good situation overall on a daily time frame. It's looking more bullish than bearish. I mean, just look at it. Have you ever seen this kind of setup before? We have not actually, right? Because I mean, look at what we're seeing right now. We're saying we came down, we went up, we made lower high, and we're trying to bull. Okay, so we are basically trying to create a structure. Okay, this is bullish structure. Okay, we need to break above this, and then we go to the 4200. Have you seen this before? No, right? See, every time we came back, we came down, we just went V shape up, which is never good. We don't want V shape. We always want this kind of structure. Okay. So, I mean, look here. We came down, we went up, got rejected. We never formed structure before going into a resistance. We have to form a structure. I mean, look here, this crazy rally, we knew that it was going to be a big bust. And actually, that reminds me of US 2 year because that's what happened at that time. So I want to quickly move over to US 2 year. I think this is very clear what we are looking at right now. We're definitely more bullish, but the Wednesday data is going to dictate where the market's going to go, either up or down, but definitely looking more bullish at this moment, in my opinion, if you ask. US 2 year and 10 year basically going up, US 10 years going up, US 2 years going up. If the market's going to go up, we definitely want to see the US 10 year and 2 year drop. If 2 year is going up, okay, and the market is going up, it's not good. That's just a time to be really scared, fearful, because that's just Wall Street playing games with the retail. Okay, they're taking the market up just to basically dump, right? And they've done this previously, and that's the rally I was talking about. Just quickly, let me show you. Compare. I'm gonna move this to line. Okay, so this is when that we had the big dump. Okay, so US 2 year at the time was going up. Okay, see right this, like this up, and the market was also going up. Never good. Okay, and so basically market just dropped so much after that. Okay, and a 2 year when it started going up, market went down. Okay, so if this keeps going up and the market keeps going up, we know we're going to go down. Okay, so just keep an eye on that as well, okay, while you're trading. So I wish you luck, and I'll see you guys in the next one. Bye.